I'd like to welcome the Nobel Prize-winning economist, Joseph Stiglitz, Professor of Economics at Columbia University. Joe Stiglitz, great to have you with us.
Nice to be with you.
Now, I don't know whether you heard, but I suspect that you're familiar with some of his analysis. Nouriel Roubini is not seeing a lot of light in the current global situation, even if you do have a short-term bounce following this extraordinarily steep decline during the COVID crisis. Do you basically agree that we have the ingredients here for a very long-term global depression, or do you see more capacity to get something slightly more positive out of this?
Well, I think the critical issue is what policy governments pursue. The second critical issue, of course, is the pandemic itself, and we don't know when that will be brought under control. But assume that we got that under control, the big issue is how will governments policy respond? And we need to be frank, there's a lot of uncertainty about that. For instance, one side says we need to provide the unemployed with assurance that we're going to continue the unemployment insurance as long as the pandemic continues. It's what we did in 2008 in the global financial crisis. The other side is much more hesitant to do that. And now, picking up a point that Nouriel emphasized, a big factor dampening the economy is uncertainty, precautionary behavior. And that lack of assurance on the part of government that it will be there is going to exacerbate the kind of uncertainty that's going to lead to limits on consumption and investment.
So how can governments confront that head on? I mean, you're quite right that we've seen this precautionary savings soar in the US particularly. And funnily enough, the low-income households who are on the higher federal benefits currently have their spending has held up because in part their benefits may be more than what they were earning before. But how can those, as you pointed out, those federal benefits might expire in July? How should a government try and get over that problem? Because, of course, as you said, we don't know if there's going to be a second wave. We don't know how long this recession is going to be. It's completely rational for businesses and households to hold back.
So the first thing is we need to have an assurance that government programs will continue so long as the pandemic continues. You know, in the beginning, back in March, people thought this was going to be a 3-week lockdown, 4-week lockdown. Certainly by the beginning of June or the end of July, things would be under control. No one thinks that today. We're worried about a second wave, a third wave, a perpetual wave. So we need the assurance that the government isn't now providing. Some countries are thinking about more specific ways of what you might be calling collectivizing some of the risk. For instance, telling companies, if you borrow to make an investment and the pandemic continues, we will allow you to extend the payments. So you don't, sometime you're going to want to make those investments, make them now, and we'll bear some of the risk. Some countries have provided, for instance, time-dated spending vouchers. So to encourage people to go spend now, there's underemployment. From a social point of view, this is good, but we understand your fear about getting in debt, and this is a way of encouraging spending today.
As you, some of the issues around this is, there is a lot of support going to businesses now, but we don't know for sure that that is going to go into investment or even into jobs. And at Bloomberg, we've looked at how many big companies in the US have been raising bonds very cheaply, raising $1 trillion worth in so far this year, more than in the whole of last year, on the back of the Fed easing policies. But they're also cutting jobs. So do you think there should be more strings attached to some of this support?
Yes, there was an interesting study that pointed out that particularly the PPP program seems to have had no effect on retaining employment. It was an extraordinarily badly designed program, and even worse, the implementation with the money going to those who were most connected to the banks and to those who least needed the money. If government has never spent so much money, and we ought to have a say on how that money is used. It shouldn't be a blank check. Uh, when I was at the World Bank, we always put conditions. I thought sometimes they put too many conditions, but putting certain basic conditions that you retain your employees, that you treat your workers in a decent way, that you move toward a green economy, that we help, with a vision. What kind of an economy do we want emerging from the pandemic? To me, this is one of my major criticisms of the programs. The idea behind them was we ought to go back to where we were in January 2020. My view, and you've talked about that a little bit during this program, is there were a lot of problems with the American economy and the global economy in January 2020. Inequality, the health status of Americans was going down, not very good. We hadn't begun the green transition, so there were so many things that knew we needed to do. This was an occasion with the government spending so much money to help move our economy along in the right direction.
I want to follow up on that sort of long-term vision in a minute. But of course, a big part of the response we've seen so far, which isn't necessarily aimed at the things that you're talking about, has been the central bank response. And that has at least had a short-term effect, it seems, of propping up financial markets. So we had a question now, a polling question for people who were listening to this about whether there's a limit to what central banks can do to shore up the markets. And I think the answers to that will be coming up on your screen. Please do take a second to pick A, B, or C. Is there a limit to what central banks can do to shore up markets? I think we're getting quite a lot in the sort of middle category, that it's not a long-term solution. So I guess going back to the longer term, can central banks be part of that longer term answer? Should we, is this the end of an era of independent central banks? They shouldn't be worried so much about inflation. They should be helping to tackle inequality, raise wages. What's your view?
First, I think there is a limit to what central banks can do, but they can do a lot. So they're really important. And I think I'm very supportive of the broader view that they seem to have taken on. I've always criticized them in the past for not taking into account the effects of their policies, for instance, in increasing inequality. They played a big role in increasing wealth inequality. And it seems that today they are taking that more into account, partly because that's very much related to their main mandate. If you have, as Nouriel Roubini pointed out, if you have increasing inequality, you're going to have deficient aggregate demand because the people at the top spend a lot less than those down below. So you cannot ignore the impact on inequality. The IMF has put inequality at the center of their agenda. And when they first did that, Dominique Strauss-Kahn said, we're doing this because our mandate is making sure that global growth is strong, and you can't do that without at least paying some more attention to inequality.
Do they perhaps have more scope for doing that now that they're effectively propping up government fiscal policy? A lot of people have worried about the fact that coming out of this, central banks we're effectively seeing monetary financing, money printing to help make very high government spending and borrowing sustainable. But does that perhaps help, if that's the main channel of their policy going forward, because if they're only trying to prop up asset markets, we know that does increase wealth inequality. Should they move away from the trying to protect markets altogether?
Well, I think there are some risks here. I was very concerned when they started propping up junk bond markets. And the reason is the classic reason of moral hazard. Some of these companies were playing at the edge. They were taking on a lot of debt. People warned them that's risky. If everything goes well, fine, but sometimes things don't go well. And the pandemic is a quintessential case where things didn't go well. And I think there is a legitimate view that says some of these companies ought to be paying the price. And if you don't do that, you will have too much debt in the economy. For the bigger firms who did this, we have a good law called Chapter 11. You let the shareholders bear the price. They lose the value. The bondholders become the new shareholders. Not a big deal. Bigger problem for small and medium-sized enterprises.
And thinking about the whole world, our economists have looked at what response emerging market economies have been able to do to COVID compared to the enormous amount of money flowing out of finance ministries around the developed world, and indeed all the central bank money printing. And it's a fraction. Most of these emerging market companies have not been able to, if you like, fill the hole that's been left by COVID or might be left by COVID. What's the most important, what are the risks coming out of that for the whole world? But what should we also be what do you think is the best answer to that for helping them?
Well, we are a globally integrated economy, and we should remember that it was the emerging markets that helped bring us out of the 2008 crisis. We will not have a robust global recovery unless all the world is recovered, and that includes the emerging markets. The emerging markets are clearly more vulnerable, both in terms of health, and they don't have the economic resources, as you pointed out, to respond anywhere near to the extent that the United States or even Europe have responded. What should have been done was for the international institutions to step up and provide them more money. They did provide some. At the G20 meeting, there was an agreement to use all available instruments. And one of the most important instruments is an issuance of called special drawing rights. It's like IMF created money. They have the authority to do it without going back to the governments, parliaments, of issuing more than $500 billion. And unfortunately, because the opposition of two of the countries, the US being one of them, that did not happen. So that's one of the first things that needs to happen. The second thing is there's going to be a lot of countries that are going to be facing sovereign debt problems that won't be able to repay their debt. And there needs to be a way of restructuring those debts. So far, the private sector has given every indication that they don't understand that there's a pandemic going on. They have no humanity. They talked about social responsibility. They talk about all these fancy words about now we get it, we understand, we have an important role to play in our society, and they're acting in just the opposite way. A dollar for them is worth thousands of people dying in the emerging markets. So I think this is going to be a critical moment for global capitalism. If the global financial markets continue in their hard-headed way of squeezing these emerging markets, Nora Rabini was talking about the battle that's going on, the new Cold War. Well, American-style capitalism is going to take a beating if America's financial markets continue to behave in the way that they've been behaving.
I guess that was partly at heart of some of the things I was asking Muriel, because he seemed to see no potential that capitalism might save itself in the way that perhaps they might have done. We might have said that there was a reset in the 30s in the US and in the 40s in response to some of the threats of populism and the threats to capitalism. One question has come in from Michael Chekim. Can market economies change, reform to be more socially, environmentally equitable, fairer, all the things that you're talking about, while with companies still being profitable? I guess that's the question. And if capitalism does reform itself, could it still make money?
Yeah. So let me add two parts of that question. One, I think the answer is absolutely yes. There is responsible capitalism. I wrote a book called Progressive Capitalism. I really believe that we can have a profitable capitalism that serves all of our society. You have to change some of the rules of the game, and you can't exploit the environment in the way that they did. You can't exploit the workers in the way that you did. But you can actually, I think, will have a stronger, more robust capitalism. The other question is the politics. Can we change the politics in a way that there will be a change in the way the market economy works? And I'm, quite frankly, I'm actually hopeful on that. Many of the countries in Europe have created a kind of social democracy where they've tried to temper capitalism, and in many of the social indicators, they do much better than the United States. Less inequality, and some of them are actually quite dynamic economies. So we actually have some proof that one can have a more socially just, environmentally friendly capitalism.
We have quite a lot of questions about Europe, and you have historically, you were very prescient in seeing deep problems associated with the single European currency in the Eurozone. But when you think about those more social market policies in Europe, and some of the things we were saying earlier about governments perhaps doing a better job of holding on to jobs in response to this crisis, are you a little bit more optimistic about Europe's future now that maybe it has some strengths relative to the rest of the world?
Oh, it clearly has some strengths. If you look at those charts of how they've succeeded in controlling the pandemic, it went way up very early, and then they brought it down very significantly. And you compare that chart to the United States, it's very, very striking. And of course, that course of the pandemic will be the most important determinant, I think, of the course of the economy. I still am worried, obviously, about the European Union acting in a politically cohesive way with enough European solidarity. They've done some very good things. Their commitment to having the Euro bonds, 750 billion euros to help the recovery. But there are debates going on about who should get the money. Should they be loans versus grants? A lot of squabbling going on. And clearly, the answer to some of those questions is obvious. They need grants, not loans. Many of the countries that are most afflicted have very high debt levels already. So I would have liked to have seen more solidarity. That would give me a lot more confidence. But what is clear is the strong responses within the country that have enabled them to really tame the pandemic and to make sure that the economic burden is much more equitably shared than in the United States.
Well, to that point, I mean, there has been a lot of conversation about universal basic income. Do you think that's a conversation that will advance now in the US as well as in certain parts of Europe? We've seen some experiments, not entirely successful, with UBI.
Well, I'm not a big fan of UBI because I think that there's dignity in work. And I think we have a lot of work to be done. I think the green transition is a big deal. We need infrastructure. We have to improve our healthcare system. We have to improve our education system. We have a lot of aged people to take care of. So when I see the list of things that need to be done, and I see that there are a lot of people who actually want to work, I think our first obligation is to make our economic system work, to make sure that everybody who wants a job and able to work can get a job. And we are failing in that basic mission. And that should be our first priority.
And I guess one question is whether you see surprising countries coming out of this with a good mix of policies. We've seen emerging market economies, whether it's a part that you tell the story of quite a lot of emerging market economies, but other places like Indonesia and China have marshaled resources to respond to this threat, and have been quite successful, it seems. Do you see us coming out of this with maybe a sort of a reordering of countries, with perhaps new respect for some, and I'm obviously speaking from London here, even less respect for others?
Clearly. I think there are going to be a couple of principles that are going to emerge. I think we're going to realize how important government is. When you had a crisis, we all turned to government. 40 years of denigrating government in the United States and the UK led to a government that was less prepared. There's been a denigration of expertise in science, and this is a kind of situation where expertise in science really makes a difference. We've come to a new appreciation of the importance of social solidarity, respect for others, wearing masks. Societies with more social cohesion have done a lot better than those where there's less social cohesion. So, you look around, the new league table, as you might put it. New Zealand is way up there, small country, but really they've gotten it under control. Iceland's gotten under control. South Korea has done a fantastic job. And I mentioned these countries. Some of them are really small democracies, but South Korea is a quite fairly large country. Germany's done a better job. I think that we begin to understand that there are characteristics of the society when there's a kind of society working together and a trust in government, then things work a lot better.
Now, there'll be some people listening who say, I agree with all that, but it doesn't seem to be reflected in global markets at all. I mean, we have, on the Bloomberg Economics, we have dashboards that we're now looking at the high frequency data of economies coming out of this crisis. And you're quite right, Germany and France have seen their economies, a big chunk of them, come straight back as restrictions have been lifted, not just because of the lifting of restrictions, but because people have confidence in the strategy. They don't think that they're going to get COVID-19. They think the government is kind of on the right track. If you look at the US, obviously we're seeing the risk of another wave, or indeed the continuation of this wave not having reached its peak, the number of cases going up. And yet in the financial markets are continually betting on the US over everybody else. Is that just going to turn out to be wrong? Or is it telling us that the financial markets are on a completely different kind of calculation?
Well, I think there are a couple of things going on with financial markets. There's always been a little disconnect between the real sector and the financial markets. Financial markets do well when wages are low, when interest rates are low. Wages are low is not a good sign of an economy. Interest rates low is not a sign of a good economy. It's a sign of a lot of worry in the economy. But I think there's something else going on. The enormous amounts of liquidity that's been put into the US economy and some of the European economies mean that people are, and in the context of a world of hoarding, cash balances have gone up and people want someplace to put that money yielding more than a zero return. And that, of course, a lot of people are hoping, praying that the financial markets will give them that higher return than zero. So I think there's a lot of speculative activity that has been generated by the massive amounts of liquidity that the central banks and governments have provided. And that's giving a particularly distorted view of the financial markets assessment of what is really going on in the real economy.
And we have actually Yanni Legbelos, who had asked about universal basic income, is also interested in Greece, because you talked about countries, Europe potentially doing better and having done some of the right things, but there are still countries that were weak and were not necessarily going to get enough support. Would you still maintain, or would you maintain that Greece will still be in the Eurozone over the next 10 years?
I think the future of the Eurozone will really depend on what policies Europe crafts. You know, one of the characteristics of Europe has always been that it's done just enough to keep it together, but not enough to really do what is needed. So it looks like they are going to get some assistance to Italy. There's a lot of Euroscepticism in Italy. If they had done nothing, I think the chances of Italy leaving would have been very high. You know, there was already a strong Euroscepticism, and some of the leading politicians were pulling Italy in that direction. And a lot of the population were supporting the view of Euroscepticism. If, as I think is likely, they will come to the help of Italy and Spain and the other countries facing the pandemic much more with greater force, I think that will renew the commitment to the European Union. But the fights at the time that are going on have shown that there's not strong European solidarity, and there's not a common vision of Europe. And in another dimension, the fact that Hungary has been moving even further away from a democratic framework means that Europe is not even sharing a common vision about what kind of political system. And the rest of Europe seems hesitant to enforce the kinds of provisions that are in the European Charter to discipline countries that depart from democracy.
No, and you raise a good point there, and it's partly the rules of the system that make it hard. I think you have to have a unanimous vote when you do these kind of things, which you're not going to get from the country concerned.
You can have one dissent. The problem is that there are two countries that are at least are departing from democratic ideals. And they never contemplated the idea that there would be two bad countries at the same time. And now they're in what we would say in the Midwest of the United States, they're in a pickle.
But you mentioned populism, and I guess it comes down to this much bigger question about whether, when we look back, will we say that this was a real turning point for the global economy, where long existing trends kind of came to the fore and forced change, or whether it will some of those negative trends will actually accelerate? You know, after the global financial crisis, we also the legacy of that was to shake up global politics and have populism, but populism that often pointed in not in a constructive, in a worsening direction. You think there's more chance of a sort of positive form of populism coming out of this, that we will shake everything up and actually end up heading in a better direction, or is it still to play for?
I think it's still in play, and I won't call it populism, but I do think the November election in the United States is going to be a critical moment. The uprising, you might call it that, in the United States for racial justice really showed a dimension of the United States solidarity that had not been evidenced before. I take that as a sign that ideals really do matter, and that the conception of what a country together means really does matter. So I'm very hopeful that in November, there will be an outpouring, and that will lead the United States to go in a different direction. And that will have, I think, a very big effect on the direction in which the world goes. One of the issues you were talking about before is the new Cold War between China and the United States. And it's clear that those tensions are very strong. But it's also clear that we share the same planet, and we are going to have to work together to deal with the problems of pandemics, the problems of climate change. And so the question is, in the midst of a reordering of the world, are we going to be able to get cooperation across governments that fundamentally may disagree very deeply with each other? You know, you could imagine yourself in a rowboat, in a lifeboat. The ship is sunk, and there may be some people in that lifeboat that you really don't like, but that's not the reason why you should sink the lifeboat. And maybe that's a metaphor to say, we're in this together. There are some others that we may not agree with, but we have some common problems facing the pandemic, climate change, global peace that we have to work together on.
Well, it would be so tempting to leave it there, but I'm going to have a final question just to bring in the global perspective, because you mentioned the US-China, and actually, even if there is a change in the in the White House at the end of this year, there really is a different attitude to China coming out of the US now, and it's difficult for many to think that won't affect the nature of globalization and potentially cause a worsening divide between US and China. So you have made the point that we're all in one planet, but we are potentially developing lots of different technologies. We're potentially trying to encourage companies to come back to the US to throw away some of those very complicated supply chains. Is those forces of deglobalization, can they be stopped? How real do you think they are?
Oh, they're very, very real. In fact, we had, in the years after 2008 crisis, been in the process of moving away from what some people call hyperglobalization. You can see that, you could have seen that in the data, for instance, in the trade GDP ratios. That was going down before the pandemic. And the pandemic has exposed the lack of resilience in our global supply chains, the lack of resilience in our own economies. So I think definitely we're going to be insourcing. It's not going to solve our unemployment problems. Much of that insourcing is going to be robots producing the goods, the manufactured goods. The jobs are not going to be going back to the deindustrialized parts of the United States. Some of it will, but much of it will not. So it's not going to solve the problems that some of the protectionist issues, protectionism has focused on, but it will make our economy a little bit more resilient. The real question is, can we get the right balance? The concern is that if we don't get the right balance, it will be what Nouriel Roubini described as a very big negative supply shock. And that negative supply shock, we know what that can do. That can lead to stagflation, prices going up in the presence of a lack of adequate demand. So what he described as one of the threats to the global economy, I think is a real threat. It's not inevitable. It really depends on how we manage this process of, maybe delinkage is not the right word, because that suggests that we're going to be totally apart, but it's trying what I would call a rebalancing of the global order. And if we do it in an extreme way, I think we can all suffer. if we do it in a thoughtful way, and let me tell you, what is going on in the United States is not what I would say a thoughtful way. But if we did it in a thoughtful way, I think we will actually get a more resilient economy, not only for the United States, but I think a more resilient global economy as well.
Well, Professor Stiglitz, it's a pleasure. As you say, ideas matter, and it is great to hear someone who I know has a very clear sense of what is wrong in the world give us such an upbeat sense of what could change and the potential that's there. So I appreciate that particularly. You're looking at a lot of the same facts as Nouriel Roubini, but actually thinking that we can change course. So thank you again. You were very quiet in your plug for your most recent book, but I will say it's called People, Power and Profits, Progressive Capitalism for an Era of Discontent. So you should read that book. And if you want to listen to this conversation, lots of other conversations like this, also sign up for my podcast, Stephanomics. But thank you, Professor Stiglitz.
Thank you, Stephanie.